Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Wednesday. Happy Hump Day, the year of chaos. Hey, good news today. Nobody declared a state of emergency, at least not yet, but it's the year of chaos. So you know something happened today. Right here in the United States, the CEO of United Healthcare, by the way, the largest insurance company in the United States, gunned down just before 7 a.m. as he was getting ready to speak at a conference. And apparently the details are somebody was lying in wait, waiting for this guy. This was, according to police, very targeted. We don't have a lot more details other than he has passed away. The gunman fled on a bicycle. So we'll wait to see. But yeah, I mean, this is kind of the world that we live in, and it gets crazier and crazier by the day. Don't know, like, right, is this a personal thing, a relationship thing, or was this a disgruntled, right, you denied health coverage and, whatever. Maybe we don't know any of that yet, but I'm sure we'll find out soon. And then General Motors, yeah, they're having a little problem. A $5 billion charge and closing plants in China as, well, apparently General Motors not so popular anymore now in China as market share continues to dwindle. But pretty soon, this isn't like, hey, we're going to, take $100 million here to, $5 billion restructuring charge out of General Motors today. Our toll-free number, 800-951-0592. Of course, the physical delivery of gold and silver. We like to call it wealth insurance. You don't want to risk everything that you've worked so hard for. The website at allamericangold.com. It is Jobs Week, so we did get the ADP jobs number out, and like everything else, the month before. Now, remember last month they came out, they had a big number, 233,000, and we were like, ooh, that's not great for the rate cutters. Well, they said, well, we may have miscounted. And the 233 is now 184, so that's what about 50,000 less jobs. And then this month, November, only 146,000. That was below expectations. So I guess it puts the rate hike possibility, gives it a little better shot because, okay, October wasn't the big banger they said it was, and now November's a little less. But here's the problem in all of the numbers. Forget about, okay, it wasn't that great. The headline number was less than expected. Wages. Are you ready for this? Wage growth for job changers up 7.2% year over year. Wage growth for those that stayed on their jobs up almost 5% year over year. These are much higher numbers than what we've been seeing, right? We've been seeing wages kind of cool off. Now, Jason, I will have to say that, a lot of these unions got some really good wage deals, and maybe reigniting the inflation that these employers are going to feel. So on the one hand, less jobs, that's good for rate cuts. On the other hand, boy, they had to pay a lot more money for those jobs. Not good for the inflation.
Right, and why do I get the feeling there's going to be a lot more negotiating for wages in the year and 2 years to come, and these earlier negotiations are going to have to be reworked sooner than you might think, right, Joe? Because it didn't seem like that they were asking for all that too much of money for the jobs they're doing, that they want to keep up doing the work they're doing. And it doesn't seem like it's that much higher than the inflation. So these earlier negotiations from last year and this year, I don't see where this is going to be like a yearly renegotiation unless there's something really good put into place that actually matches what's going on, Joe. And if inflation gets worse, like we believe it will next year especially, you can see all kinds of this stuff going on, and then the inflation will just, as soon as you raise the wages, printing the money is the inflation, but raising the wages is the most inflationary part of raising prices quickly.
Yeah, normally you don't go back and say, hey, we agreed to give you 60% over the next 4. Hey, can we reduce that? That normally doesn't work out very well. Bankruptcy filings continuing to rise. Guys, it's such it really is a chaotic year. When you think about filings with companies of $50 million or more, we're approaching a high, even during the pandemic, right, when everything shut down. There's only 23 of them, right? We've gotten 19 and counting, and it looks like we're going to break that record for these larger bankruptcies. And, of course, these smaller bankruptcies are everywhere, right? We're talking about bankruptcy levels going back to the financial crisis. So it's an interesting time. We say it all the time. Valuations are at record highs, right? It just feels like, man, what domino is going to come where it all comes crashing down? Patriot Radio News Hour will be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. A quick look in at the markets. The Dow's up 200 points. The S&P's up 24. The NASDAQ is up 185. The 10-year note has been bouncing all over the place, was quite a bit higher earlier this morning. Right now, flat at 421, but like I said, it's up to 427. Crude oil unchanged. As crude inventories, an unexpected big draw in U.S. crude supplies. On the gold side, gold's up another $13, 26.56, and continuing its climb back here. Silver, man, China just released its silver consumption data. Incredible. The increase in silver consumption in China is just off the charts. Silver's up another 36 cents, approaching 31.50 now for silver again, kind of building back here after we got a needed sell-off after the Trump win. But again, we keep telling you, you got to take care and take precautions from what the market is telling you. What is the bond market telling us? Right? The yield curve, after years of inversion, it uninverted what? 2 months ago? That's always been, and it's never not been. I wish I could give you, oh my gosh, hey, the yield curve was inverted for this long and nothing bad happened. That's not what's happened. When you look at significantly long yield curve inversions, they all end the same way. Whether it was the 87 crash, the dot-com, the financial, right, the Great Depression. By the way, the Great Depression was the longest inverted yield curve. The financial crisis was the second longest. Up until this time, it was inverted even longer than those events. Be ready here. We talk about valuations. Why is all the big guys selling? That's probably the easiest answer, right? When they look at it like, Yeah, we just, stocks went up 25%, and they're priced like they're going to go up another 25%. That's not going to happen, right? Let me sell at the top or near the top. I don't have to be at the very top. Get ready. We've told you about what's happening in the U.S. debt markets. Look at what happened in South Korea yesterday. Just chaos. Now they've got to come out. They're going, oh my gosh, we got to spend all this money trying to stabilize our currency. France, more chaos again today. Now people are saying, is the whole EU going to implode? Yes. The answer to that is simple. Yes. Yes, it is. Yeah. So are we. Get more prepared. Get more diversified. Get your gold and silver put away. Use those big IRAs and get some gold and silver in a gold and silver IRA. Check out our buddies over at YRefi. 10.25% fixed rate of return. You can use it as income. You can compound it. You get to decide. What about fees? They're going to whack me with fees? Nope. Well, what if something happens? I need my money back. They're gonna hit me with penalties and attack my principal. None of that. I don't play any. They're kind of like us. They just don't play any games. Check them out. 888-Y-REFI-24. 888-973-3924. On top of the data from ADP today, the wages red hot. We got what the manufacturing people were saying. We had a big drop in the ISM services PMI from 56 to 52. Remember, anything below 50 is contraction. But by the way, it was the biggest drop going back to the summer. And here's where it happened. This was the bad part about it. The drop, new orders. That's never good, right? When companies are saying, well, all of a sudden, we're not getting the orders. On top of that, they said prices paid went up again. Employment was continuing to fall. They're saying that the input cost continues to rise. And so, Jason, this was another one of these things where kind of like, okay, is the inflation coming back again?
Yeah, I don't see how it's not going to come back because at least in this country, you're lowering the rates when they didn't really get to the so-called level of 2% that they really wanted to get to. And Joe, I remember way back in 2022 and 2023, we kept talking about how the Fed has no out here. Lower the rates in print, the inflation comes in. Keep the rates higher, get rid of the inflation, and have markets crash. And so they've been trying to do this tightrope, this tap dance on the razor's edge, and lowering the rates right now. I think they've decided inflation is the way to go. I really think with what's going to happen with the next administration, inflation is definitely the name of the game, Joe. We're looking at a lot of inflation, and just need a big emergency to blame it all on. No, it's not the financiers. It's not the central bank. It's not the government spending too much. It's the emergency. And, Joe, it might have to be a huge one this time to get people to really look the other way.
Yeah, we had Cargill announcing layoffs. So it's another one of the big food producers. With one of our plants in Kansas, because of the beef, there's not enough beef. They got to shut down plants. Foot Locker today, dismal. They've been a really good performer, and they just said, man, we don't know what happened. All of a sudden, the customers, they just stopped coming in, and they apparently they're going to have to cut back on shoe buying. Stoli Vodka. Here's another bankruptcy filing today from them. And then really when you start looking at, we were talking about China. Just from January to October of this year, the most massive silver surge on record coming out of China. They said that total trade volume had reached almost $10 billion. And again, remember, this isn't the whole year. A 21.5% increase. Imports reflecting a huge piece of that. By the way, imports of silver to China up almost 30%. And they're already, and the hard part is they're already the biggest importer of the metal before this occurred. During the period, China imported 1.4 million tons of silver. Peru, Mexico, and Bolivia accounted for 76% of it. Additionally, silver powder imports. So this is really big, because this is, hey guys, don't worry, don't turn it into a bar. Don't go through the cost. Don't go through the hassle. Don't put it up on the exchanges, right? We don't want to have to buy it from London. We don't have to want to buy it from the COMEX in New York. We'll just buy it straight from you. And oh, by the way, we're going to pay you like you made it into a bar, right? It's a win-win for the miners. 2,500 tons. By the way, that was up 19%. Photovoltaic silver powder surged 46%. These are all in 1 year. This isn't like, oh, it's up 46% over the last 10 years. No, this is all in this year alone. They're saying that China is going to exceed 6,000 tons of this photovoltaic silver. And Jason, these numbers are off the charts, and it's a big reason why you're seeing silver now continuing to rally here. Guys like myself, David Morgan, others, everyone's saying we expect $40 silver. The problem with 40 is it probably means it goes to 50, right? That's always the problem with 40, because that's what it did the last time. So be ready. I've got Silver Eagles on sale again today. Silver's up by like $1.50 since the Thanksgiving weekend. But rolls of Silver Eagles, $750. Cases of Silver Eagles, $18,625. And Jason, we're the cheapest around.
Yeah, and if anyone's sitting around thinking, because there's always, when it comes to industrial use, there's always different ways to get around an expensive problem usually. But if anyone's sitting around, why silver? Why silver? Well, because there are other metals that can do what silver does, right, Joe? They could use palladium. They can use platinum. They can use rhodium, by the way. Rhodium is used in jewelry as a substitute for platinum and palladium. You have to use silver because it's the cheapest. Joe, it's the only commodity that's not at record highs in the last bunch of years. Every single commodity, from lumber to oatmeal to houses, they're all record highs except for silver. Joe just rambled off the continued higher usage of silver. The reason that it's record high is because it's artificially cheaper than it should be, but it's also the cheapest. They would use copper if copper could be used in all of these other things, but sometimes the red metal doesn't work. You have to have a more reflective properties that's in silver. The conductivity of silver is better than even copper. And Joe, you've read off all that stuff, and I've seen some projections of where copper is also going to be possibly the best performing metal commodity next year for 2025, which shows you that industrially they'll use as much copper as they possibly can, but then there are some things that you just can't use copper for, and that's where silver comes in. And at some point, Joe, I guess it'll break. And J.P. Morgan, They sure have a lot of silver, don't they, Joe? They've been kind of sitting on that silver market for years and years and years. They've been accumulating, haven't they, Joe? And if they get out of any of their short positions, they're just going to be sitting on a big pile of silver that's going to go up exponentially. And I think $50 is just a low number. If Joe's right, it hits 40, it'll just take off to 50, and beyond 50, you can see it race to 75. So your ounce of silver that you're buying today, $7.50 for less than $40 per coin. You could be looking at 70. What if it went to $75 an ounce next year because it just takes off, Joe? I mean, think about what a roll of silver eagles will be at that point.
Yeah, I mean, this is something where, like I said, we're the cheapest around out there. When you look at what silver is poised to do, this one's a little more simple, right? Because this is just supply demand. The demand is overwhelming the supply. This is the third straight year of silver deficits. There's just not enough of it. I mean, it's just that simple. Because it's really when we think about electric vehicles, solar, wind, all the green stuff, your cell phones, your computer, every data warehousing, right? All of these things, it requires silver in large quantities of silver. And then let's not forget war. It's incredible the amount of precious metals and rare earth metals that go into bombs and fighter jets and tanks and all that stuff. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Wednesday. The import data coming out of China when it comes to silver just blew everything away. They knew it was going to be big. This was even bigger than what most people were expecting. Silver continuing its rally here, up another 40-some cents here, and I don't think it's anywhere close to done right now. U.S. Silver Eagles, $750 a roll. If you buy a case, a green monster box, that's 25 rolls. That's 500 ounces. Save another $5. We're already cheapest around at $7.50. Save another $5. $18,625. We got gold up $13 today. $20 gold piece. Listen, these deals don't get any better than this. $27.45. $27.45. You're not even $100 over. Hell, you're not even $90 over spot. These are just incredible opportunities when we think about what's happening. And again, it makes a lot of sense because we see big demand out of China. We see big demand out of India. South Korea, the gold markets have exploded in the last 48 hours. And that's not a country you normally talk about. Japan, another country you normally don't talk about. Explosion in their consumers getting into gold and silver. Here in the U.S., Jason will tell you, the election cycle, it's been soft. But guess what? That just means you get to buy more for less when you're able to do the thing. I'll just tell you right now, what would a normal, what I would call a normal gold premium on a $20 gold piece be over $3,000, right? On sale, we'd probably be looking at like $29.95, maybe $29.75, with gold at $26.55. They're $2,745. I mean, you're talking $275 less just because. And again, here's what we know. The second one of these dominoes falls, right, and Wall Street's down 2,000, 3,000, the bond markets and the Fed, we got to have an emergency, right? We got to buy debt. We got to increase our balance sheets. All of a sudden, not only do the premiums all come back, but then you start paying crazy premiums. Remember COVID as a great example? Remember Silver Eagles? You were paying like $18 over spot for a Silver Eagle. Buy it now. Be prepared. now. Take advantage of this pricing now. This is like buying, when you're talking about buying silver, this is like buying silver at like, I don't know, 30, maybe $29.75. But on the gold side, a $20 gold piece at $27.45, that's like buying gold, I don't know, what, $2,500, $2,450, something like that. That this is just the ultimate play here. Be smart with your money and keep stacking it up. 800-951-0592. And we've been talking about leverage. This is another one of those signs about, are we heading for another one of these, debt spirals? We remember the financial crisis. There was a lot of leverage. There was a lot, especially like on the insurance companies. Guess what? They're out there doing it again. The Fed now actually warning. See, this is funny. Because they will warn. They just don't have a press conference, right? Jay Powell doesn't go on TV and tell you about it. They just, we put it in our report. Who reads the Fed reports, right? If Jim Cramer didn't say it, you didn't hear it. Well, guess what? The semi-annual, here's what they call it. You would think this would be important. It's the Financial Stability Report. Boy. My guess is this is probably pretty important. Why wouldn't they talk about it? Well, you can draw your own conclusions. But when it came to the leverage, they started talking about and warning that the hedge funds are the most leveraged since going back to the financial crisis. They said that these hedge funds were all of them, were near the highest levels observed since the data became available. Now, here's the funny part. When did they start worrying about this? 2013, right? After the financial crisis, they're like, oh my gosh, maybe we should track this stuff. And guess what it came out with yesterday? Oh my gosh. Whoops. It's the highest that we've seen. And then they went and talked about the insurers. The life insurance companies continue to allocate a substantial percentage of assets to risky, less liquid instruments such as leveraged loans, collateralized loan obligations. Oh my God, that word's back. High-yield corporate bonds. Okay, so what is high-yield corporate bond? That's not Apple, right? That's not Meta, right? That's not Amazon, right? Those are low-yield. High-yield corporate bonds, that's junk companies, right? Why do they got to pay high yields? Well, because there's a good chance that they might not make it. But, Jason, again, the Federal Reserve now saying that the insurance side of things and the hedge fund side of things, the most leverage since they've been tracking the data.
Well, and yeah, so you're talking about overvalued, right, Joe? And that's one of those things about inflating your way out of it. You don't really have to gain value. Your number, if it stays the same or goes up a little bit, but the inflation makes everything cost more and more and more. Suddenly your value starts to match, right, Joe? You don't have to, your number doesn't go down. This is what I said about housing. I don't think we see a major housing crash in price. Maybe some, 10%, I don't know. But you're not going to see 2008 because the inflation kind of skews value, doesn't it, Joe? Those evaluations could get better just by simply inflating the price of everything, right, Joe? And you just kind of keep the price of those companies level. This is a world that people are not used to, Joe.
Telling you. When the shoe drops, it's going to be painful. Patriot Radio News Hour. We'll be back after the break. 1-800-951-0592. More trouble now in France and in Europe in total. France bond yields skyrocketing. German bond yields skyrocketing. As they say, Europe is now once again at the edge of the precipice here. You remember Greece? Greece, no offense to Greece, but it's tiny. Like, it's microscopic. Right, when you think about world GDP, right, they're a nothing, and yet they almost took it all down. Now, England, right, we know the budget problems there in France. Here's how bad it is now in France. They can't get tax increases past the parliament. They can't do it. They keep trying, and they keep getting shot down. But here's how bad it is getting. They're saying that things are getting desperate now in France, and Washington, it may actually be getting involved. The spreads, the difference between the interest rates on a French debt and the best of, I guess, the Germans, which is the best debt, that's the highest level since the Eurozone crisis of 10 years ago. Further pushing up what the French have to pay, but now we're seeing both German yields and French yields are rising, but the French are rising even further. And Jason, there's now talk that France may end up in default if they can't pass a budget. And here it is, right? This is the problem. No debt can be raised without parliamentary approval, implying that if the budget fails, there will be a serious risk of outright default, right? We know that, listen, they're going to do something. There's no doubt in my mind they're going to do, at least I think they're going to do something. But here's the problem. They won't cut spending, and they don't want to raise taxes. What does that sound like? Sound familiar? Here's the problem. The French don't have a printing press anymore, Jason. This thing, I'm going to tell you, guys, the world bond markets are in trouble. And it's one of those things where, once again, kind of like the financial crisis, all of a sudden it becomes, there's warning after warning after warning. Nobody heeds it, and then it bursts. And now we've got, think about just this year alone. We had, Japanese yields blow out, British yields blow out. We had South Korean yields blow out, French yields blow out. How about here in the U.S.? They cut 75 basis points and yields went up 75 basis points. Jason, they've been blowing out everywhere.
Greece is number 54 GDP in the world.
Okay, there you go.
Now
What's France?
Remember how much trouble Cyprus caused as well? And Iceland, remember they had some problems? Cyprus is number 103 and Iceland's 105. There's only about 200 countries in the whole world. Right? I mean, if you want to include all of them, there's about 200 countries, give or take, depending on what you consider a country. And so when country number 54 can tilt the world sideways, that's pretty bad, Joe. And that just shows with Greece how much it's a worldwide system. I mean, we keep saying that. I keep telling people this is a worldwide system. We're not so much we're not really the enemies of China or Russia when our central banks are business partners. Are we really their enemies? Is China really going to blow up the United States? There's too much economic activity there. So it's so intertwined, Joe, that a little country like Greece upsets the system that's in place. And so when Joe's talking about France, I mean, what is France? France is probably in the top 20, right?
Oh, yeah, they're like seventh.
So when you have France having problems, that's a huge – yeah, they're number 7. So, yeah, That's a huge thing. They're part of the G8 or G7 or whatever, right? They're part of the biggest of the big countries, and you can't have country. Japan's number 3 still. This is probably falling, but Japan. Look at what Japan is. Japan is a failed economic nation. They're just being held up by printing. They've decided, well, we're going to print our useless currency. We know that nobody wants yen. We'll just keep printing it because you guys will. By the way, back when the $5 trillion worth of bailouts happened for the '08 crash, Joe, remember we found out later that after a FOIA request that it was $29 trillion, and they were giving it to the banks that were failing, and they were giving it to the countries. $3 trillion was given to Japan to fix them with the economic crisis. $3.1 trillion, if I remember right, just to fix that country. And yet Japan's like, well, they're just going to keep doing it, aren't they, Joe? They know where they're at. They're dependent. They've decided to live off that dependence, haven't they, Joe?
Yeah, and well, again, Japan's about ready to become only the fifth. They used to be the second largest economy behind us. India's getting ready to pass them. Germany's passed them. They're about ready to become fifth. UK is sixth. France is seventh. They've had blowouts. So think about this. The fourth, the sixth, the seventh, South Korea's 12th have all had blowouts in their debt markets. Isn't it interesting now? Poland now becoming a major gold buyer. Poland is out saying, listen, don't count us out, right? And again, right, they're right on the border with that Ukrainian-Russian conflict. They're now gobbling up gold all over the place. It is one of these things where when you think about, Greece or Cyprus, how far down the list they really were, these are much bigger events. And that's how it works, right? Every bubble gets bigger, and the disaster, the cleanup gets bigger. So it just makes sense. Patriot Radio News Hour, final segment coming up. 800-951-0592, Patriot Radio News Hour. Joe and Jason wrapping up this Wednesday. The big sales, $20 gold Liberties or Saints. Doesn't matter, whatever one you want. $2,745. I mean, we're just, right down there. Think about this. Gold's actually been $50 higher than that this year at certain points. So take advantage there. And then silver. It's an all-out buy. We've had an all-out buy on silver pretty much all year. $750 a roll for U.S. Silver Eagles. Buy a case or more. A case is 25 rolls, 500 ounces. You save another $5 a roll. A case of Silver Eagles, $18,625 at 800-951-0592. Commerce Bank, the latest, saying, hey, despite the 30% rise in silver, they're saying that a lot more upside to come. Silver prices held the critical support at $30. So remember, over the Thanksgiving holiday, went down there, held it. It's also now above $31. But in their latest note, they're saying that silver for 2025 looks like it's going to go much higher. Still, silver is still cheap compared to gold. We know that, right? The gold-silver ratio. They said even though gold or silver's dropped from its high, remember it got almost to $35. He said, don't worry. Not only is it going to go back to 35, it's going to go much higher. And again, they started talking about these photovoltaics supplies or demand, that have doubled in the last 3 years. They're saying, just to give you an idea, that is going to surpass all the coin and bar production globally. This is going to be a huge driver, and they're saying that it is not going to end. They expect silver to hit even higher highs than we've seen in the last several years, Jason. And, of course, really simple. Demand is going to be the driver of it. And it's just that's on there. And they just can't get enough of it out of the ground. I mean, that's just all there is to it. And here's the sad part. 10 years ago, it maybe would have cost most miners $15. Some miners $10 to get it out of the ground. Now the problem is, guess what? Even in the 30s, they're like, man, it's costing us that. Right? We can't open up other pits because we need a price point of $40 or $50 before we can afford to go get it.
Yeah, and copper spiked this year as well, and when copper calmed down, that's kind of when silver calmed down. If you look at when copper calmed down, that's when silver calmed down. I'll have to get the piece. We'll have to play it sometime. But this guy was talking about how copper is going to be the number one performing metal next year. If that's even partially true, silver is going to go right through the roof, Joe. It's just going to explode, especially when it gets past that 40.
Yeah, silver and copper are a really good pair. That's a great point. 800-951